We're a few moments away this morning from Fed Chair Powell's speech at the Fed Symposium in Jackson Hole. Let's bring in Apollo's global management chief economist, Torsten Slok, joins us here at Post 9. T, happy Friday. It's good to have you with us, especially today. I mean, we look at your charts every day. You clearly have some sympathy for the conundrum the Fed finds itself in.
Yeah, because on the one hand, inflation is going up, and as Sarah was just saying, anecdotes in this earnings season have certainly been that prices are about to go up. We're just not quite seeing it yet in the CPI inflation data. There's, of course, a lot of debate about how much it will go up, but instead just agree that the direction of travel for inflation is higher. And at the same time, we had the last employment report, where the direction of travel is weaker. So will Jay Powell put weight on there's a risk that inflation will go up, which says the Fed ultimately should be hiking? Or will he put weight on the bad labor market and say, no, now we should be cutting? And that is the difficulty for the speechwriters for Jay Powell at the moment.
The notion out of the minutes that inflation was the larger asymmetry, you think that's still a fresh view?
Well, I do think that that's misguided where we sit today, because now, first of all, we have much more information with the employment report for July, which was so much weaker. So I think that they will tend to put more weight, and Fed speeches have given more weight. Even Austin Goolsbee recognized, yes, services inflation is a risk of going up, but the labor market getting weaker is certainly something that we need to monitor very carefully.
What about this drama surrounding the Fed governor, Lisa Cook? I mean, there's even new information this hour from the FHFA director, Bill Pulte, who's claiming that, some of the mortgage fraud took place when the Fed governor was actually sitting as governor, listing her residence in Georgia, but previously putting it up for rent. How serious do you think that is, and are there market implications?
Well, of course, the broader issue is that this is, of course, a very important distraction from the discussion that we're having about inflation, unemployment, and the dual mandate. But it does touch on, of course, the broader issue for how does Jay Powell deal with this. There will not be any questions from the press at this event, so he will be able to talk about just inflation, unemployment. But it's very clear that this is, of course, something that is hanging as a cloud over Jackson Hole at the moment.
But do you think that there are implications for the bond market? Do you think that it's too much of a reach to look at another potential vacancy at the Fed?
Well,
that's ultimately what the upshot could be if this gets worse. Again, it's just an accusation at this point.
Absolutely. We did have 2 dissents at the last meeting, and we have not had 3 dissents since 1988.
Wow.
So we are now looking at a situation where there might be more disagreement on the FOMC. We'll see what happens to Lisa Cook and what's going on that front. But overall, it's very clear that if Trump does get more folks into the FOMC that are thinking more about lowering interest rates, and we certainly have dissents that go into the 2, 3, or even 4 dissents, that could become a very important debate for markets, because then when the Fed comes out, and especially during the press conference, if Jay Powell says we lowered interest rates or we didn't lower interest rates, the first question would be, well, what about the arguments from the dissenters? So that's why disagreement on the FOMC, disagreement on the ECB's governing council is always not good for financial markets, because it is bringing up this issue around, did they actually mean this decision? How convinced are they that this is a good decision that they made today?
We've been talking about just the labor market dynamics for a while now, and in terms of how we should characterize this relatively low level of job creation. Does it still represent a labor market imbalance, as Powell seems to think? And even if it is, when you have low absolute level of job growth, that does restrain overall economic growth as well, which would appear not to necessarily foster more inflation.
There's a number of things that are headwinds to the labor market, at the moment. Of course, we already saw jobless claims weakening a little bit more. It's not falling out of bed, but the labor market is certainly gradually slowing down, as most FOMC members also have been recognizing. But some of the sentiment leading indicators from consumers asking about what are your expectations to unemployment over the next 12 months, that's been seriously deteriorating in the last few months. Even when you look at the NFIB small business survey, more businesses are saying that poor sales is a big issue when they respond to the survey, and that is also an important leading indicator of what will happen to the unemployment rate. So the fear you can have is that a lot of the sentiment indicators continue to point in the direction that companies and consumers are getting more worried. So that's why the Fed is likely also, given they put a lot of weight on anecdotes, probably also getting more worried about that the labor market is at risk of slowing down. And that comes in particular, again, at a time when there's a risk of inflation going up. And that's why the extraordinarily complicated situation for the Fed is this stagflation impulse that's hitting the economy. And it's not only coming, by the way, from tariffs and trade war, it's also coming because of deportations and restrictions on immigration, holding back immigration, and of course deportations on their own, lowering labor supply and putting upward pressure on wage inflation, especially in the sectors where unauthorized immigrants work.
So what would be the biggest mistake for the Fed right now?
Well, that's why if you take the economics textbook out and say, what should we do when there's stagflation? The economics textbook basically says if inflation expectations are anchored you can allow yourself to focus on the slowing labor market.
Which they
but
are.
That is, well, if you look at some of the measures from the New York Fed, they have come down a lot, but they are anchored in the sense that they are a lot better than where they were just 6 and 12 months ago. But the challenge is that some of them have started to tick up again. So this is why the debate on the FOMC, and this is why the September meeting is so difficult, because they need to debate, are inflation expectations anchored? And if they are, then we can allow ourselves to say inflation expectations are anchored, so we're cutting because we worry about the labor market. If both inflation and inflation expectations are not anchored and beginning to go up, then they will not have that luxury. Then they need to put more weight on, hold on, inflation expectations. If you look at 1 year ahead, inflation swaps, they are pricing that inflation in 12 months' time will be 3.3%, much higher than the Fed's 2% target. So that's why the Fed is keen on getting inflation and inflation expectation down.
Do you think the commentary from certainly retailers these past couple of weeks and what we've seen in fresh food, CPI, and all that stuff, can that drive expectations?
Yeah, well, if you look at Walmart earnings that just came out, it is showing that there's risk of sales going down, and there's certainly, of course, a risk also of prices going up. They said the last earnings season that prices are going to go up. So have you heard a number of retailers really saying the stagflation story, namely that we are going to raise prices and we're having losses because of tariffs, the automakers, and we just saw the Cybertruck pricing right now, right. Of course, are the prime example of this. The question is, to Sarah's point, yes, these anecdotes are interesting, but are they showing up in the overall CPI? And the challenge now with the overall CPI, 1/3 is goods, which is where the tariffs are, but 2/3 is services. And the services ISM prices paid has really started moving higher. So you begin to worry that this is not only about goods anymore, and this was what Austin Goolsbee was saying yesterday. There is a fear that services could also move higher. And that just brings it back to Jay Powell's challenge today that, well, maybe inflation is not completely under control quite yet. And especially also with the dollar going down, also putting upward pressure on inflation, he just needs to step on eggshells here and be very, very careful in how he makes sure it stays neutral and make sure you turn every stone in the garden and every argument is heard.
Torsten, thank you. Good to see you. Torsten Slok. We will take